Well, good morning, everybody. So I want to welcome you. It's 11 o'clock, so we're going to start right on time. Today's presentation is on cash reconciliation. It is presented by the Local Government Services Bureau, and Tammy is going to be presenting today. Hopefully you got the handouts. I didn't send it all to the listserv. So if you are searching for them, that's where they are, is on the listserv. Couple of reminders. I see we have some newer people coming in. We do open the time at the end up for questions, and there are two ways to ask them. You can ask them either through the chat box, which is the bottom of the screen, or you can hover over your name and I will unmute you and you can go ahead and ask your question. So I think that's it. This is being recorded. You should be able to access it tomorrow. It typically takes a little while, but it looks like about a day, and then we can put it on our website and then also in the education portal. So I will go ahead now and pass the screen over to Tammy. So, thank you, Tammy.
Okay, thank you, Jane, and welcome everybody. We're going to talk about the exciting topic of cash reconciliation today. And I'm going to go ahead and share my screen so that hopefully everybody can see that. All right, let's go ahead and get started. So today we're going to talk about cash reconciliation. We're also going to touch a little bit on the related internal controls, and we're going to talk about tracking the debits and credits throughout the month. So the duties of the municipal treasurer are found in the MCA 76612. And those duties, real briefly here on this slide, are to receive, disperse, and serve as custodian of all public money, provide for accountability of the entity's cash receipts, deposits, and investments of all departments, offices, and boards, pay all claims and warrants when presented for payment when there are funds in the treasury to pay, the warrants and checks, and required periodic department reports on money receipts and their disposition on forms to the governing body. And the governing body shall direct the municipal treasurer to open separate accounts for receipt of money for the governing body. Only the municipal treasurer may open an account for the receipt of local government money. All right, so the primary function of the municipal treasurer is to manage the cash by, as we're talking about today, reconciling the bank accounts, investments in cash on hand to the general ledger monthly activity. So it's important to have a procedure in place with a specific timeline to make sure that the reconciling is done on a monthly basis. It's going to be easier to identify any errors that may have been made during the month if you are reconciling your software balances to the bank balances as soon as the bank statements are received. The longer you wait, the harder it is going to be to recall the circumstances surrounding certain entries that may need to be adjusted or corrected. All right, so bank reconciliations are simply comparing the activity of cash that posts to your bank account to the transactions that are made in your accounting software. And during the monthly balance reconciliation, you will need to do journal vouchers for any interest earned and to record any bank fees that were charged during the month. And during this reconciliation, this is also going to be the time if you have missing entries that you're going to be doing those journals to reconcile to those bank balances. So This is the time to make sure that the entries that are made throughout the month were done correctly and that the bank did not make any errors posting to your account, because that does happen, and that all of the electronic charges or deposits that have been made properly and were recorded in your software properly. All right, and now we're going to talk a little bit about some definitions. Some of them are basic, some of them just need a little clarification. So your cash is just your cash balances on hand. It's the total, what's in your bank and your investment balances. Cash equivalents are the temporary investments of cash that are not required at present time, but could be available within 3 months, whereas short-term investments mature within 12 months. Of course, your bank statement is just that statement that you're going to receive from your bank each month showing your current activity. Deposits in transit are those amounts that your entity has received and recorded in your software, but yet they're not quite showing up on the bank statement as of yet. But they will show up on the next bank statement. And of course, outstanding checks, those checks that have been written, same as the deposits in transit, written and recorded in your software system, but they've not cleared the bank account yet. Redeemed checks, those are the checks that have actually cleared the bank account. So they're in your software and they've cleared the bank account. NSF checks, those are the ones that were not honored by the bank for one reason or another when it was presented to whoever wrote the check to you, to their bank account. There was not enough money in there to cover the check. A bank error, of course, like I said, that does happen. Those can be incorrect amounts, wrong account, or even the omission of an item. Bank service charges, those are the fees that the bank charges you for having that account and processing the activity through your bank account. The overdraft fees, stop payment orders, or even check and deposit printing fees. Then we also have interest earned. The interest earned from the money that gets invested, it's in your bank account. Cash receipts, the pre-numbered receipt that is written, or if you're inputting it into your software, for all the incoming payment, cash, checks, auto deposits, and interest earned. It's everything that you're receiving into your account. And that cash receipts should be made immediately. Do not hold on to cash. Petty cash accounts, those are the accounts that are used to make change and to pay for small expenditures, the cash that you keep on hand. This account can be combined, a combination of cash and checks with small balances, and the original receipt should be provided to show where those expenses were made. A claim check should be written to the petty cash fund for replenishment, and the expenses of the claims would be coded by reviewing those receipts and putting those in your software system. All right, so where to start? Remember that this is one of the most important aspects of your position as a clerk or clerk treasurer. Protect yourself and your position by accurately reconciling your cash on a regular basis. Monthly is very much preferred. So as public officials, the citizens are putting their trust in you to be good stewards of your local government's assets. And cash is one of the most important assets there is, and it must be treated as such. Reconciling consistently will not only protect the cash asset, but it will also help protect you in your position. If you have differences you can't seem to find a resolve, ask for help. Have someone else take a look. They might be able to see something that you might be overlooking for one reason or another. They might ask a question about something that may lead to where your problem is. And it's always good to have a fresh set of eyes. Maybe you've been looking at it so many times that you're overlooking something that you're seeing constantly, where somebody else with a fresh set of eyes might question that and help find an error. And don't let it go. If you wait until the next cycle, it could compound your problem and cause even more issues to resolve later on. So we're going to talk about step one. Step one is receipting. The more information you add, the better, but always make sure you are recording the required information to complete the receipt. This is only going to help you when you're reconciling. So most people have receipt books that have all the information printed on the form. Make sure you are using all of those lines on your receipt form. It should be pre-printed and pre-numbered. You should not be able to have multiple copies. You should include the date and the amount, not only the numerical amount, but also the written amount, same as a check. And it should show who it was received from. For example, if you got an electronic receipt from the Department of Transportation for gas tax, make sure you're writing on that receipt that it came from them and that that's what it was for. The fund and the revenue account information should also be on the receipt, and a description of the transaction. So example, a donation for park playground equipment by so-and-so. And then the type of payment received, whether it was check, cash, credit card, or ACH, or some other electronic deposit. And then lastly, but most importantly, make sure that whoever is filling out the receipt signs it or puts their initials on it, so that if you have questions about the receipt in the future, you know who to go to ask. So here's an example of a cash receipt. And as you can see up in the upper right-hand corner, it does have the pre-numbered receipt number. It also has a place to record the fund and account number. It includes the date and a place to put the written amount and the numerical amount. And then the space for what it's for, and a checklist of what type of payment it is. And then of course, and like I said, importantly, who it was accepted by. Make sure you're filling this out completely. It's just going to help you when you go to do your reconciliation if there's an issue with the receipt. So keep control of the cash in cash receipt book. Having a policy procedure for handling the cash is a must. Safekeeping of cash in the cash receipt book is critical. Never leave cash or the cash receipt book unattended. When you are receiving in cash, follow the process start to finish and avoid interruptions that could compromise the safe handling of the cash. It's easy to get interrupted, but it's okay to ask somebody to wait for a minute until you finish what you're doing and can safely put the cash away. Ask for help if needed. I do understand that a lot of your offices are small and sometimes there's no one else you can ask for help. But just remember to do the best you can in making sure that you're practicing safe handling of the cash. And this also includes stamping and endorsing the checks immediately. Don't wait to do that. Also remember that there is a separate process for replenishing your petty cash. Follow it. It will help mitigate causing errors if you follow the replenishing policy. Do not use cash receipts to replenish petty cash or cash a personal check for somebody. Remember that these transactions need to be reflected in your software and match the activity on your bank. If they don't, it's going to make it almost impossible for you to reconcile. And then keep all copies for future reference. Their receipts are pre-numbered and each one needs to be accounted for, even if it's voided. If you write void on a receipt, make sure you're keeping that so that you can follow the numbering sequence. Do not throw away the voided receipts. So here's some tips for when you accept cash. Always keep the cash in view of the customer until you have completed the transaction. And always count the cash in the presence of the customer. Separate the bills by denomination, all facing one direction, largest on top. Stack coins by denomination to ensure the denomination. Add up the bills. If your total doesn't agree, repeat the count until it agrees. Reverse the order of the denomination, largest on bottom, face up. If a discrepancy still exists, ask a coworker if available to count. And don't put the cash away until you verify it's correct and the transaction is complete. So keeping a cash drawer. If you have departments that keep their own petty cash, you should randomly audit those cash drawers for accuracy and to make sure that they are being replenished properly. Remember, as clerk treasurer, you are responsible for ensuring the proper handling of all cash. And have someone else audit any petty cash drawers that you are in charge of as well. All right, moving on to step 2. Making the bank deposits. So cash receipts need to equal those bank deposit slips. You're going to add up all the cash receipts and verify that they balance with the total of your bank deposit slips. Don't take the deposit to the bank until you verify it balances. And always use duplicate slips. Keep a copy in your books in order that they were written. Ask for help if you're having trouble balancing. If a receipt looks off, ask the person who signed the receipt for information that you need to help make it reconcile. So here is an example of a tracking bank deposit and cash balance spreadsheet to keep for the month. And it's a bank depository record. It can be handwritten or it can be a computer spreadsheet. This one happens to be on an Excel spreadsheet. And we're going to take a little closer look at that on the next slide. So it allows you to track more than one account. You can see on the right-hand side that it's showing the water construction fund, the money market account, and STIP. And all of those are being reflected on that main depository sheet. So you're going to want to make sure that you'll see that there's where you're tracking all of your deposits as they take place and your claims and payroll checks as they're written. You can see in that middle column, that's all your transactions. And then whether it's a debit or a credit and how it affects that ending balance. So you're going to add the deposits as they take place, add the claims and the payroll checks as they're written, and you have to make your deposits and your ACH deposits. All of that has to be included on your depository record. So now we're going to touch a little bit about internal controls. Separation of duties helps maintain internal controls. If someone can process a transaction start to finish with no other person's interaction, you are not practicing proper internal controls. If you are a small entity and it's not possible to involve multiple people in your processes, make sure you're scheduling time to sit down with a member of the governing body and go over the activity so that at least one other person is reviewing the activity. I have a little example for you about internal controls. So this example is credit card processing, and we're going to call the clerk. Her name will be Sally to protect the innocent. Sally managed our corporate credit card, and she was responsible for sending out the applications to the employees requesting the corporate cards. She was receiving and approving them, making sure that they had proper management approval. She then ordered the cards from the bank, and she received the UPS envelopes when they came in to be distributed to the proper employees. She made sure all the monthly credit card charges payments were made to the bank on a monthly basis, and she collected all of the receipts and the transactions that everybody made on their cards. And she recorded all those transactions in the software system to the proper expenditure codes. So I'm going to play devil's advocate here. Can Sally set up a fake credit card and use at her own personal leisure? She can, because she is starting that process from start to finish and there's no other interaction. She's presenting all of the information. She's reconciling every transaction from the software to the bank. She's making the payments to the bank. She's in complete control of all of those activities related to this credit card processing. So it doesn't matter whether or not she would do it. She has the opportunity because those controls are lacking in that whole process. So one thing that you can do in that whole process is if you're the only clerk, what you can do is you can take that bank deposit balance, that amount that you're paying the bank for all of those card transactions, and you can sit down with your governing body and go over those transactions and make sure that the amount balances to what you're paying the bank. And by doing that, they're seeing everything that's being expensed, and they're going to be able to recognize if there's an expense that they are not aware of, or if that expense doesn't seem legitimate. All right, just a little example to talk about internal controls. And if it isn't working, change how you do it. So handling automatic and electronic transactions. Another process that might be appropriate to do at this time as well is to monitor and review your bond covenant requirements you may have in a particular fund to make sure you have proper restricted cash balances. We see that a lot as an audit finding where you've set up this restricted cash for some of your funds that have projects and for the bonds, and you set it up and then you just leave it at that. A lot of those covenants have percentages, and so you need to be looking at how much cash you have in your restricted account and make sure that it meets that percentage guideline in your bond covenant. You may need to do a journal voucher to move cash out of your unrestricted cash account down into your restricted cash account. So while you're doing your reconciliation process, this is just another step that it would be nice to monitor and make sure that you're doing to prevent oversight and not making sure that those unrestricted funds or those restricted funds have the proper balances in them. So here's a tip for reconciling of cash, and you're going to hear me say this often. I believe Darla put this together originally, but put it where it isn't. And what that means is if you're looking at your software and comparing to the bank statement, if it's in your software and it's not on your bank statement, it's a reconciling item. If it's on your bank statement and it's not in your software, you're going to need to do a journal voucher to include it in your software. So that's where that comes from. Just put it where it isn't. An example of those are your interest, your bank interest, and then your deposits in transit. So step 3, month-end processing. So if you have multiple bank statements, keep a checklist for each month end and make sure that you've received all the bank statements that you need. And make sure you're reviewing those statements immediately for transactions that haven't been received, or revenues or journal vouchers for expenses, and receipt of the interest earned during that month. And any NSF checks, redeemed checks that have cleared the bank. So I have a quick little story here about receiving in all the bank statements. So some of you may be familiar with this, but there was a case in Dixon, Illinois back in 2012, and there's a documentary on it called All the Queen's Horses. But basically, the city comptroller of Dixon, Illinois, she embezzled $53 million over 20 years from the city of Dixon, and they have a population of around 16,000 people. The way she was caught was because the clerk, she was away on vacation, and the clerk was in a hurry to get her bank statements reconciling her cash. And she had a list of all of the bank statements that the city comptroller wanted her to balance. She was in a hurry. She wanted to get them done. And so she called up the bank and she said, just send me all of the bank statements. So they sent her all of the bank statements that they had at the bank. And she happened to find a bank statement that she'd never seen before. And that happened to be the embezzling account. And so that was kind of just an example of how making sure that you're balancing those bank statements on a monthly basis is critical. That's just kind of, it's a kind of a fun documentary to watch if you're into kind of that investigation and that fraud stuff. It's a very interesting story. It was very sad, for the citizens and everything, but it's kind of a cool documentary if you ever get an opportunity to watch it. So, and again, also, I just want to make sure that you, to say that ensure that your voided checks are handled correctly. Sometimes that's where your errors can lie, is with those voided checks. All right. So it's very important to make sure that you're reconciling your clearing accounts on a regular basis as well. Remembering that it's a clearing account. If you stop using it, the balances should eventually clear out to zero. And that's typically your claims and payroll clearing funds. So make sure you're balancing those as well. And this is just an example of reconciling those claims and payroll clearing funds. You'll see on the right-hand side is the payroll clearing fund, and on the left-hand side is that claims clearing fund. And those claims usually come out quarterly. And so you're going to have to reconcile for the payments, money that's gone in, but yet those payments haven't come out quite yet. All right, we're on to step 4 already. The reconciliation, the important part. The step-by-step process. Make sure you're balancing before you process to the next step. It's important that you're balancing and not going on to the next step before you're balancing. So the first step is going to be to verify your cash receipts to your software. If they balance, you can proceed to the next step. If it doesn't balance, you're going to need to research and correct. Check that all your cash receipts or revenue vouchers are posted. Verify that you've put that interest earned into your software system, and compare your deposits on the bank statement to your deposit slips. And this is where it's going to be important if you have an issue with the receipt, that whoever filled the receipt out is listed on that form so that you can go ask about the transaction. And then check your bank statement for your ACH deposits. And then once you can get this part balanced, then you can move on to the next step. So the next step is going to involve the totaling your checks and your electronic transactions, including those payroll and claims, and compare to the bank transactions. Remember, if it's not balancing, put it where it isn't. You're going to want to do a journal voucher for any of your bank charges that come through, and any outstanding electronic transactions to the outstanding check report. You make sure that you want to put all of your redeemed checks in. That's the next part of the next part. And make your list of outstanding checks. And don't move on until you've got that balanced out. So as a follow-up to the end of this part, you're going to take your ending bank statement balance, add in all your deposits in transit, subtract your outstanding checks and electronic payments, and any bank fees, and then run a cash report in your software and compare the ending balance of your cash balance in your software to your adjusted bank balance, except the claims and payroll clearing funds. You're not going to want to include those in your cash balance. This is just a little summary of those steps 1 through 4. Review your cash receipts for accuracy. Your cash receipts have to equal your bank deposits. Your transfers, interest and service charges, redeemed checks, and outstanding list have to be adjusted for. And then finally, the reconciliation. Does your adjusted bank balance equal the cash balance of your funds in your software? So here are some examples of a reconciliation. This is a spreadsheet. Again, we've got our transactions, our depository record, and listed with our claims and checks. And then we've also got each fund. So you've got the bank balances per statement, outstanding check information, your deposits in transit, and then your total cash balance per your software. You're going to compare the balance per the software to the total balances of all your accounts. If they balance, it's reconciled until next month. If they don't balance, find where you are off before you move on, and ask for help if needed. So here's some common errors that you can look for. So is the beginning balance correct? A lot of times that's where you can find an error, is you're not starting with the same beginning balance. And then do your deposit totals equal your cash receipts? Are all deposits recorded and all checks recorded? Review the voided items. Sometimes that's where your issues can come into play. And then make sure you're accounting for all of the electronic or automatic transactions that come out. And then transposition errors. A lot of times that can be the problem. And even, we're all human, we all make addition and subtraction errors. Re-review your addition and subtraction and make sure it's correct. And make sure the amounts are recorded correctly. A lot of times those bank errors are because it's taken for one or the other and they're not the same, that numeric amount or the written amount. And then make sure that you're comparing the correct time frame. Your bank statement balance is correct and it's for the right time frame from your software. Sometimes you do have to adjust that. If your bank doesn't close on the end of the month, you may have to adjust that bank balance and account for that because your software is on a month-end basis. Make sure you're comparing the same ending date. And then review for your deposits in transit. Review for your redeemed checks that are still outstanding, and DNSF check amounts. Again, if it doesn't balance, don't move on. Fix it. Find it and fix it. Here's some more things that you can ask yourself when you're trying to find common errors or some tips in finding your errors. Is the amount you are off a familiar number? I have talked to a lot of entities who say, well, I'm off this certain dollar amount from month to month. Yeah, that's the first mistake, is moving on without finding it. So make sure that you're finding your error and correcting it before you move on to the next month. Otherwise, it could just compound. Compare your redeemed check amounts in your software to your bank statement. Have you done that? Compare the deposits in your software to your bank statement. Review your cash receipts again, comparing both the written and the numerical amounts. And then double check the bank statement balances you are using. Again, verifying that beginning bank balance. Recheck your additions and subtractions. And sometimes you may need to take a break from reconciling and come back to it. Sometimes you look at those numbers so often that they just are too familiar, and it's so easy to overlook something. So, and if possible, have someone else take a look and see if they can find anything, and maybe just them asking questions will help you find the error. All right, that concludes the presentation. And I know it was kind of a short presentation, but I would really welcome a lot of questions. If you have questions, can go ahead and address any questions you may have.
Thanks, Tammy. I am looking to see, just a reminder, if you do want to ask a question, hover over your name and click on the little hand. And then Tammy can go ahead and answer any questions you may have of her. You can equally enter them into the chat box.
So one thing too that I might mention is I get a lot of the time, like I mentioned earlier, I get somebody that says, you know, I've been off this amount for so long. And sometimes it's because you've taken over for a previous clerk, and it might be that clerk's offage that is just carrying forward from month to month. My recommendation on that is to look at the dollar amount. Is it material? If it's a small amount, talk to the governing body and determine if you want to do an adjustment for that balance so that you can start with a clean reconciliation. Sometimes it's almost impossible to find someone else's error. And if this is an amount that's been off month after month for quite a while, it might not be worth your time and effort to try to locate an error from months, possibly even a year ago. So determine the materiality of the offage and talk to the governing body and see if they would approve making an adjustment for it. And then document everything.
Well, Tammy, you must have been very succinct and covered absolutely everything, because I don't see any questions.
Well, and even if somebody has questions later on after they actually get into doing the process, please feel free to reach out to us. You know, sometimes we have people that will send us their information to see if we can find maybe where they're off. So we're more than willing to help in the reconciliation process if you're just at your wit's end and cannot find an error.
Tammy?
Brenda does have a question.
Yes.
Okay, so I guess when you were talking about the immateriality, for those of us who have been here a long time, kind of know how to determine that. But for the new people, can you discuss what you're talking about when you're saying is it an immaterial amount, and how would they look at that? Because most of your mayor and councils aren't going to be able to determine whether it's an immaterial amount, and the new, is it or not?
Yeah. So you're going to want to look at the amount of cash you're dealing with. If you have if you're a larger city or town, and you have, you know, $1 million in overall cash, and you're off, you know, $10,000. Look at the materiality of of that offage compared to your overall total cash amount. And that materiality is going to be determined by your entity, your governing body.
Okay. Because they're
So if
also
you
going
have
to have to, they're also, when they do make that adjustment, they're also going to have to justify.
exactly. And by materiality, you know, what that means is it worth your time and effort to find the amount of money that you're off? If you're spending hours on end trying to find, you know, a smaller dollar amount, that it's not really material. It's not worth your time to be trying to find that. If it's a large amount, definitely keep working on that. Solicit help, try to find where that offage is. And maybe potentially it's even working with your auditors to try to determine where that offage is.
Well, I did want to say Brandon just posted a link to all the Queen's horses, which I'm really interested in seeing. I didn't know that there was a link to it. So thank you for mentioning that.
Yeah, Dixon, Illinois was known for being the hometown of Ronald Reagan. And another little interesting fact about that was that she kept telling all of her departments that there was no money. I mean, she even put up this nice little presentation with a big red slash through it. You know, her police department wanted to buy a cop car, and she kept telling them, there's no money. There's no money. You can't do it. You got to make budget cuts. You got to do this. And another thing that happened was a neighboring town that was of the same size was questioning why a town their size didn't have any money when their town was doing fine. So kind of had some red flags. She was a beloved person in her community, and that's part of the problem is everybody just trusted her, and she had sole control over all of the processes. And I mean, if you think about it, $53 million over 20 years is a lot of money for a population of 16,000.
Wow.
Yeah, there were a lot of the citizens were just flabbergasted that it could happen. So yeah, it's a very interesting documentary.
Yeah. All right. Well, I think we'll end there. Thank you so much for the presentation again, and your very valuable time. And I just have to say what all of you do is amazing. I'm learning so much from hopping on your webinars and seeing the amount that you do. It's huge. So just a reminder, the next session is going to be Aubrey Japp, who is the Assistant Director at Butte Silverbow Public Archives, is going to be presenting on storing and maintaining records. So please join us for that. That will be on July 8th, which is a Wednesday at 2 p.m. And if you are posting, I'll open up all the mics as we close, but if you're posting as a clerk or let's see, I see some telephone numbers, or even post it in the chat, let me know who you are so that I can log that attendance. So, all right, well, thank you. Thank you, Tammy.
Okay, yes, thank you.
We'll see you later.
Okay, till
bye.
next.
Yeah.
Okay.
Jane, for some reason my chat's not working, but so I'm here.